Hello and welcome. It's wonderful to see a full room here. It's packed. This is great. And I know I speak for the whole Semafor team when I say that we are excited to have a day full of insights. I'm Alexis Akwa-Jiram. I'm the managing editor of Semafor Africa. I co-author and edit the newsletter that hopefully many of you get 3 times a week. And I'm delighted to be joined by Tshabalala, who's the CEO of Standard Bank, which is the biggest bank in Africa by assets. You operate in 20 countries across the continent. So, Sim, you have built your track record on digital banking and innovation. I wanted to start off, given that we're here today to talk about connecting people, I wanted to talk about digital transformation. Specifically, what do you see as being the next wave of digital innovations in banking across emerging markets?
Thank you very much indeed, Alexis. It's a real pleasure to be here. And thank you to Semafor for inviting Standard Bank to be present. Standard Bank, as you know, is the largest financial institution on the continent with assets of $170 billion. It is by far the largest. It's been in existence since October 1862 under the same name, although when it was formed, it was called the Standard Bank of British South Africa Limited. We've since dropped the British. It's now the Standard Bank of South Africa. And we've seen innovations throughout. And the big point I want to leave you with is that, banking changes, but banking stays the same. And let me just explain what I mean by that. We know that for over 4,000 years, banking has existed in temples where people on top of a bench would bring their valuables, and they would be taken by the money changer, who would then advance those funds to somebody else who was in deficit. Nothing's changed. It's been the same for 4,000 years. So that's on the retail front. On the corporate front, we know that Aristotle, 4 centuries before Christ, speaks about Thales of Miletus, who designed the first option contract, which was for olive presses. And so accelerate that to September 2024, and where do we see banking? We see banking, particularly on the continent, leapfrogging what has happened in other parts of the world. We see cryptocurrencies in large parts of the African continent, with Nigeria being the lead in terms of both the knowledge and the usage thereof. We're seeing South Africa introducing interesting regulatory processes to register and allow crypto exchanges, to allow cryptocurrency to operate as a financial instrument as long as it's regulated. We're seeing taxation laws being implemented to make sure that people account for the taxable receipts. But importantly, we're seeing a tightening in other parts of the African continent because of the risks associated with crypto. And we've seen the failure of a number of cryptocurrency firms. The second thing we're seeing is the advent of hyperscalers working closely with the incumbents. Salesforce, I think, was mentioned as one of the sponsors, working with the incumbents, such as ourselves, to improve the customer interface, because most people want to have the same experience in banking as they have in all their lives, to use the phone. We have a mobile app in our bank where you can do all your banking on the app, whether it be risk management, buying insurance, making payments, and you can open your loan or your payment in a number of seconds. The third development we're seeing is central bank digital currencies, which have been ubiquitous using blockchain, but we also know that a number of countries have had challenges in implementing them, with some interesting lessons, but we'll be seeing those CBDCs in the wholesale space because of the use of blockchain. I could go on for longer, but let me stop there. But those are a couple of the examples. A lot of challenges, regulatory challenges, but we're seeing, the main point I wanted to make is the incumbents, such as ourselves and our competitors, competing with the hyperscalers, competing with the telcos, and competing with the fintechs.
And I really want to dig a little deeper on some of these points you made about crypto, blockchain.
Yeah.
I think so much that we're going to see in terms of digital transformation is energy intensive. And you need the infrastructure as well. You need the fiber cables and so on and so forth. Now, in terms of developing that infrastructure across emerging markets, and specifically in Africa, we see there's a risk premium when it comes to credit agencies and just getting the credit needed for these projects. So the African Union plans to launch a credit agency. I wanted to put to you, how effective do you think that would be in de-risking projects? I mean, specifically digital infrastructure projects, but just projects in general.
Again, Alexis, like a classic member of the Fourth Estate, you've managed to pack a lot into one question. So allow me to address the point. So the first one is, there is no question but that the African continent requires vast amounts of infrastructure, and therefore it's going to cost us a lot. Our corporate and investment bankers calculate that we will need roughly $3.4 trillion in the next while to put in place the energy, the logistics, the roads, the bridges, the fiber, the towers, and so forth. So vast amounts of infrastructure, lots of money required. The second, which then comes to the last part of your question, the second proposition is these innovations like crypto use vast amounts of energy. Yeah. The mining thereof is mind-blowing. And yet on the continent, we are gifted with solar and wind, and therefore there's an opportunity, I guess, to use renewables for that mining. So that would be the second point. The third point is that as a banker, I'm agnostic as to what rating agencies there are. I mean, I'm not a politician, I'm just a humble banker. And what we are interested in is the efficacy of what rating agencies do. Now, there is no question also but that there is indeed an Africa perception risk premium. The IMF economists wrote a great paper late last year on exactly this topic, the Africa perception risk premium. And there's lots of data to point to its existence, and one of which, for example, is we know that Cote d'Ivoire issued a bond earlier this year at a yield of roughly 6.6%. Mm-hmm. A country in the developing world, not in Africa, with a similar rating, issued its bond at 6%. And in what world is that country better run with more fiscal rectitude, more monetary policy, better industrial policy, etc., than Cote d'Ivoire? And it's really hard to explain that premium. There's lots of statistical work that people have done to suggest that the premium may not exist, and that to address it, countries need to focus again on fiscal rectitude, transparency of budget planning, reducing the size of the informal economy, liberalizing their currencies, and so forth. So there is that proposition. The argument by the AU that we need a rating agency, again, there is evidence to suggest that some agencies make decisions based on idiosyncratic factors that have got nothing to do with the data supporting those outcomes. There are many examples people use, one of which is the Nigerian example, where one of the rating agencies downgraded them, and the reasons given were about the ability of the country to execute its fiscal policies. And having engaged with the country, they still downgraded them to the fury of the Nigerian authorities. And so it is argued that such an agency by Africans would address the problem. I would only say that what matters actually is the transparency, the sophistication of the models, the professional discipline is what would matter to users of those ratings by such an agency. So for example, if all that agency did was to replicate what current rating agencies do, it's hard to see what its competitive advantage would be.
So essentially, they'll need to do something different
Yeah.
if they're going to be effective. There's one other thing I really wanted to touch on with you, which is the situation in South Africa. I was out in Johannesburg earlier this year, covered the election.
Did you purchase a home?
Maybe next time.
Well,
maybe
then
next
the conversation's done.
I was distracted by the election and the reporting of that. But I've been struck by the fact that really there's an opportunity for South Africa to have a reset in terms of so many things, in terms of government policy and its agenda with this coalition government. So what I wanted to ask you is, what can the new government do in terms of reforms to attract more capital and become an investment hub?
Firstly, South Africa has got, with all humility, one of the best constitutions in the world. It is well crafted and contains a Bill of Rights which compares with the best in the world. Secondly, it's got a judiciary which is very good. It's got a business sector which is strong. It's got a labor movement which is very, very strong. It's got a business sector which is strong. It's got banks which have implemented, for example, the Basel rules on banking supervision, on capital and liquidity. It's complied with the rules that relate to recovery and resolution, well ahead with what the rest of the world has done. It's got mining houses that have got vast experience. It's got universities which are very strong. The point I'm making is it's got incredibly strong institutions.
It does, although it's had a very tough time before the coalition government. We saw what happened with Eskom,
Yes.
load shedding for years,
Yes.
Transnet. I mean, and the difficulties with logistics.
Yes.
So that's why I'm asking. This is a real opportunity.
So I would submit to you that the factors that you're referring to are consistent entirely with what happens in a country that was run by a former liberation movement, and that we were being tested like all other countries that have been run by liberation movement. And I would submit to you that we've come through that test with flying colors. We are an A student. What is the data to support that? Firstly, the electorate pronounced, and the moment the elections results came out, the government accepted them. The ruling party accepted them, and they agreed to a coalition government. They completed the negotiation of a coalition government in 2 weeks. Another country in the Northern Hemisphere, in Europe, took 589 days to do the same. The country's Belgium. And South Africa took 2 weeks.
Yeah.
It formed a government of national unity, which is constituted by, yes, the former liberation movement, which got 40% of the vote, and is in partnership with the Democratic Alliance and a number of other smaller parties. They have got a contract in terms of which they will be executing against these policies that you're referring to. And indeed, I had the privilege of spending the whole day with the president, with his coalition members, all singing from the same hymn sheet. The need for South Africa to participate in the Africa Continental Free Trade Area and do the right thing by the AfCFTA. The need for South Africa to contribute to the human rights and ESG principles associated with the extraction of critical minerals, making sure that we reduce and make it easier for people, goods, ideas, and capital to move throughout the continent. And then importantly, to fix the infrastructure, the electricity, the roads, the ports, necessary for the move of those infrastructure, of those rare minerals, and then have light and heavy manufacturing in the country and in other parts, of course, of the continent, rather than simply shipping out those critical minerals unbeneficiated.
And do you believe those are the reforms that are needed to attract more investment?
Indeed. So those are the reforms that are currently happening. They are being accelerated by the 7th administration. South Africa is playing increasingly an important role with its partners in the AU and the African continent to make sure, Alexis, that this is indeed the African century.
So Sim, just to summarize, it's been wonderful talking to you. You've taken us from Aristotle and the history of banking through to explaining that $3.4 trillion would be needed to really provide the digital infrastructure needed for the transformation that we're going to be talking about throughout the day. And then as well as that, you've explained just the types of reforms that this new coalition government in South Africa is going to be rolling out in terms of engaging more with the rest of the continent through the African Continental Free Trade Area, but then also in terms of work on logistics and ports. Sim, it's been a delight speaking to you, and thank you very much for your time. And please, if you can just give Sim a warm hand of applause. Thank you so much.